Good morning, everyone, and welcome to the latest CU Benefits Alliance C-Suite Coffee Breaks webcast, Roadmap to Cryptocurrency and Blockchain for Credit Unions. I'm Elizabeth Galentine with Content Innovation, here to kick things off and introduce today's speakers. Before we get started, I have a couple of housekeeping notes. First, we are recording this webinar and we'll be sharing the link with you afterwards so that you can watch it again and share it with colleagues. Second, we highly encourage questions during today's webcast. We'll be having a Q&A portion at the end, but please feel free to submit a question at any time during the webcast. If a question pops into your mind, just type it into the Q&A button that you see on your screen. And with those things in mind, I'm happy to introduce our panelists for today. We have our host, Jon Harris, who is CEO of CU Benefits Alliance. Jon is a nationally recognized employee benefits and insurance expert. He has 30 years of experience in the financial services industry, including building successful startups for credit unions and banks. Next, we have Travis Hoban, CTO at FTSI. Travis is the founder of the Utah Blockchain Coalition and a member of the Government Blockchain Association Banking and Finance Group. He is also an elected city legislator, helping to pioneer the use of blockchain technology in voting and government records management. Rounding out today's discussion, we have Jon Ungerland II. He is CIO Information Innovation at DaLand LLC. Jon leads information and innovation strategy at DaLand CIO. His philosophy is to ensure financial liberty and literacy during this era of digital transformation of value. All right, that takes care of our introductions, and now I'm happy to hand things off to Jon Harris to start today's discussion.
Thank you, Elizabeth. Welcome, everyone. I am super excited today, and I don't usually get excited about stuff, but this is really a cool discussion that we're going to have today, because normally these C-Suite coffee chats I have to talk about insurance related stuff, employee benefits, things that are kind of in my lane. But today we're going to talk about something that actually I'm pretty passionate about, have been involved in this space since 2017 on a personal level. And I really believe that we are at the precipice of a new financial system rollout. It's been happening over the past few years, but I really do think we're kind of moving for real from this paper system into a digital system. And I want credit unions to thrive in this new paradigm because for one, kind of selfish reasons, we are a CUSO, so we're serving credit unions all over the country. So I want you to succeed in what's happening in front of us. Quick story, in 2017, I kind of went down this rabbit hole, if you will, about blockchain. I went to a blockchain conference in Dallas, Texas. I bought my first Bitcoin and a couple of altcoins. And a side note, I have not sold or moved any of that crypto back to paper money. Okay, just keep that in mind. I've had this crypto for 5 years or more. And I just say that to paint this picture about credit union members, which I am a credit union member. We know that millions of dollars are flowing out of your credit unions, and you probably have all run these reports, but you're seeing, over all of credit union land, millions of dollars going into Coinbase, these exchanges called Coinbase and Gemini and Uphold, you name it. There's a lot of them, and it's possible that these dollars may not come back into the credit union. We don't know that for sure, but it's possible. Mine hasn't. I've had it for 5 years outside of the financial institution system. And so the worst thing, though, that I can think of about that is that if people, your members, find ways to kind of not use the system anymore, like maybe not do the loans through the credit unions anymore. That's the part I don't want to happen. So I really want this to be a takeaway, kind of to get you started, to thinking about what your strategy might be going forward, what it might take to do that. And I really want credit unions to succeed at this. So with that, let's get this party started. And we have a chat box as all these webinars do. If you want to ask a question, feel free to do that. So let's get it started. So the first question, I'm gonna start off with Jon. This is really for both of you, but Jon, I'll give you the honors for the first question, and that is, give us your simplified definition of cryptocurrency and then in blockchain kind of together, really.
Yeah, great question, and one that I think credit unions should really be diving into. So I would use a metaphor to define blockchain and cryptocurrency as an intro for credit unions. And I would say Blockchain it is like a technology that blockchain would be best understood as a technology from an alternate reality, right? Specifically a reality, not a fictional reality, an alternate reality, a reality where instead of choosing to process electronic money almost only in centralized repositories controlled by large organizations in our economy and in our world, like centralized internet, centralized bank processing systems. You can think of blockchain and cryptocurrency as technology from an alternate world where we chose to process money and data and information and transactions, not in hyper-centralized repositories controlled by large organizations, but instead locally in decentralized structures by smaller institutions and cooperatives of people. So if we look at the technology as a distributed, decentralized, local, democratic way to process and store data, and to rely and trust large organizations and large repositories of information less, we can see that these technologies, blockchain and then cryptocurrencies they support and enable, these technologies are really parallel or complementary to what credit unions, to the original philosophies of credit unions, to store and process wealth and information locally and to locally govern that. If we understand this alternate universe where information can be stored and processed locally, democratically, in a decentralized way, then we can start to see how these technologies might be important to the business models of institutions that are supposed to embody those same ideas for their members and shareholders. So that's what they are: localized, decentralized, distributed methods for storing and processing data and transaction around the globe. New networks of financial transaction processing, new networks of value storage, as you alluded to, that are already rising up all around us.
Great. All right, Travis, let me hear your take on that, because I get different things from everybody. So
yeah, I like Jon's take. First of all, Jon, thanks for having us on the webinar today. It's really a pleasure to be here. I like Jon's take. It's kind of a Marvel multiverse take on it, so I like that. So how about I build on what Jon just said a little bit? So I'll kind of use a comparable technology. So if I will say crypto is to the blockchain what email was to the internet, and I'll say that again. So crypto is to the blockchain what email is to the internet. Blockchain is the underlying technology advancement, and crypto is just one piece of that blockchain world that is starting to be built. And crypto is that first killer application. It's what's getting everyone introduced to blockchain technology. It's getting everyone on board and using it. If we think about the internet, the first thing that everyone kind of used the internet for was email. Well, there was another thing, but it's not PG-13, so I won't mention it. But basically, crypto is this thing that's getting everyone addicted and using the blockchain technology. Now, we don't understand blockchain technology, just like we didn't understand internet protocols. All we knew is that we could do something cool with it, and that's what we have today: is the ability to have this new form of transfer of value and such. So what Jon was talking about with decentralized and distributed, how I kind of relate this is, let's use a technology or an industry that everyone's familiar with. Back in the 90s, or previous to the 90s, everyone in the music industry, it was centralized, it was controlled, right? Anyone who wanted access to music, there was one way to do it. The major record labels determined what artists got signed, how that music got distributed, and what music you ended up being able to buy or listen to. Then along came this technology called Napster, which decentralized that industry and totally disrupted it. Now everyone could have access or provide access to music, and it totally changed the music industry moving forward. Now Napster was ultimately shut down, and why? Because it was still centralized. There were still this single point of failure And thus came along a company called BitTorrent, which is a decentralized company that can't be shut down because there's no single point of failure. There's no founder that you can arrest. There's no central servers that can be shut down. Everyone who's participating and using BitTorrent is helping to host this system in a decentralized and distributed sort of way. And so that's what we're looking at with blockchain technology. It's the ability to take information, transactions, assets, and essentially provide them or provide a home for them in a decentralized and distributed way where, basically they can't be corrupted or shut down and such. I can talk a little bit later about how crypto specifically relates to this blockchain, but yeah, crypto is to the blockchain what email was to the internet. It's that first killer application that's getting everyone introduced to this new technology.
Yeah, I like that. I've also heard like it's like fuel for an engine kind of thing. The engine can't really run without the fuel, right? I've heard that one too. So that kind of goes along with what you're saying. So I'm of the opinion that credit unions need to have a game plan. So my question to each of you, we'll start with Travis on this one. Why do credit unions need a cryptocurrency game plan?
Okay, well, the number one reason is it's here to stay. It's not going anywhere. 88% of the top 100 companies have a blockchain strategy. And again, I'll differentiate blockchain and crypto, right? Crypto is just one piece of this larger blockchain infrastructure out there. But if we talk about crypto specifically, so 20% of US adults have exposure to crypto in one way or another. And of that, 20%, a vast majority are underserved and underbanked populations. They're also young male. So if you're looking at your member base or your opportunities for growth and you're saying to yourself, maybe we could get involved with some more of the underserved community or underbanked community and young male, males are important market for us, then probably you need to have a crypto strategy. That actually doesn't even touch on the aspects of blockchain and how it can ultimately transform how operations and how banks and credit unions are doing business. Credit unions in particular, so they're uniquely positioned as a trusted partner of consumers, of their members. They're uniquely positioned to be able to take advantage of this interest in cryptocurrency and such. So if you think about it, when somebody goes and opens an account with an exchange, like Robinhood or Gemini or Coinbase, there's this significant KYC process they have to go through again that they've already gone through with their credit union. Most consumers, research shows that most consumers would prefer to do business with their crypto business with their primary financial institution if they could. So basically, what you're doing by not having a crypto strategy is you're forcing your members to go somewhere else to find these products and services that they're interested in. Whereas you have this awesome opportunity as a trusted partner to be a good place for them to not only access the products and services, but information, education, and be able to kind of keep that member in-house, so to speak, as opposed to forcing them to go somewhere else. So it's just a great opportunity overall to maintain that relationship. And then there's all sorts of other things we could talk about later.
John, same question.
Well, let me start by saying I agree with pretty much everything Travis just said in terms of his analysis of whether cryptocurrency is here to stay and what's happening in terms of members already using it, already moving into it. I would just add on maybe a strategic analysis that says something like, why do credit unions need to be formulating a strategy for this, or whatever your original question was there? Well, because we're being presented with ample data from the marketplace that says that other large financial institutions are, because we're being provided information now after 5 or 6 years of folks like Travis and you and me monitoring this in the industry. We're now seeing folks at CUNA writing articles about how credit union members are moving into this asset class at a disproportionate rate to the rest of consumers, your consumer base in the US. I think that's because of the obvious parallels between the technology model and the business model and mindset of credit unions, by the way. I think another reason credit unions need to be moving into this space is they've got to be informing themselves about the facts that in the 2017, 2018 lows for these assets, there was roughly $25 billion in stablecoin money out there in the network. Now, in this latest collapse, there's about $175 billion in stablecoin money sitting on the sidelines that is ready to move into other crypto assets. So what this means is that dollar equivalents are leaving the traditional financial institutions, and they're not coming back. They're sitting on the sidelines in these new networks, waiting to move into other use cases for higher yields, higher dividends, better financing, better returns, less inflation. Right? Let's not forget the big word, inflation. So in my theory, credit union executives need to be looking at all of these strategic realities, hyperinflation, returns, dividends, yields, financing, portability, usability, cost of transactions. And in all of these categories, these new financial networks outpace the old electronic dollar network. Another thing to be aware of strategically is that we might be, i.e. we probably are, or certainly are, living through the era of decentralization. You know, we've got all this data that says that over the last 10, 20 years, consumers have, consumer trust in centralized institutions fallen off a cliff. And we're going to see other centralized institutions fail. Central banks, large crypto exchanges, et cetera. And in the wake of those failures, the communities and consumers will still want to use these new assets. This is the first new asset class in 30 years. Consumers aren't going to turn away on it, not going to turn their backs on it. Governments will regulate it. Large institutions will fail. Consumers will continue to lose trust in large institutions. And in that wake, there will be a great opportunity for local institutions to bring value to storing and using this wealth locally. That's my argument, one of my arguments for why we need to be paying attention to this as an industry.
That's great. So we're going to switch gears a little bit. And so Travis, this one's directed for you. Many of us believe that the next evolution in the internet will be immersive. Okay, that's kind of this buzzword for now, decentralized and built on the blockchain. How do you see the world of banking in this new environment, this new web environment, I guess you'd call it?
Yeah, so this kind of this is kind of an extension of the first question you asked us. So the blockchain is the underlying technology. Crypto is one piece of it. It's the monetary network, so to speak. It's the way that value is transferred. But blockchain also, when we think about some of the other applications of blockchain, we've got what some people call Web3. Or kind of this next evolution of the internet, or I'll call it a vision for the next evolution of the internet, because we're not really there yet. If you look at Web 2, so Web 2 was this vision for the internet of basically, the ability to interact, social networks. Web 1 was kind of, hey, just static web pages. There was no interaction. Web 2 was this vision, and Web 2 was first talked about in the mid-90s. We didn't really get Web 2 until 2005 when Facebook came on the scene. And so there was, this 10-year plus period where people had this vision of going from Web 1 to Web 2. Now, people are talking about Web 3 right now, which is this next world of the internet that's built on blockchain technology. And we're probably still, 10 years out, right? But it's a vision that is going to eventually come to pass, will happen. And basically, when we talk about Web3, we're talking about a world where essentially it's a decentralized web where there's less, as Jon has been talking about, these centralized authorities. Web2 was all about big platforms, Facebook, Google, Apple, controlling our experience and our access. Web3 is this vision for an internet where it's decentralized. Everybody has the ability to govern and interact and on their own terms, basically. One piece of Web3. So let's just talk about one piece of Web3 that might be applicable to credit unions would be this concept that in this digital world, this virtual world, this decentralized internet that we're going to have out there, is people won't be interacting as people as so much as they will, as a profile or as, this virtual entity, right? So when I go online, I could be a totally different person than I am today. Well, how are credit unions going to interact with me in that world? And so universal digital ID, digital identity is something that, we could see as something really important to credit unions, in that credit unions might be opening accounts and establishing relationships with members that are just a profile and they have no idea who that person actually is in real life. And a universal digital identity, could provide a lot of, I guess, just disruption to the industry. And then you think about lending and you think about the metaverse. People talk about this metaverse. This is kind of another piece of this Web3 world that we're venturing into. My daughter, she goes on to Roblox. She has a job. She actually got fired from her job because I wouldn't let her go on enough. She was delivering pizzas. She got fired. Now she delivers packages. She's like an Amazon driver, and she's only 6 years old, but she has to go on and do her job, and then she gets a paycheck. Well, there's a lot of interesting things that could be happening here with credit unions in this kind of this new world that we're living in. A lot of opportunity, and I know that you're thinking, well, that's not a space we're going to play in. I guarantee you all, in 10 years, you all will be playing in that space. You will be lending on not physical assets, but digital assets. I'll get a loan for my virtual digital car, in the metaverse. And so there's a lot that we could talk about. I mean, it's a huge rabbit hole, John. You went down the crypto rabbit hole. Just wait until you go down the Web3 metaverse rabbit hole. But there's definitely going to be opportunities, and I'll talk kind of maybe at the end. You asked us to share final thoughts at the end of how credit unions can start to venture into this world a little bit, but it's definitely something to be paying attention to and starting to look at. It definitely will be coming, just like Web 2 came eventually. Web 3 will come eventually. So,
yeah, I agreed, and I guess I'm on this bubble. I'm kind of at the age where I think that kind of stuff is crazy, but I have kids and they don't. And so it's like this, it's like once the people that are my age and older kind of are out, we retire, we're out of the system. And I think that stuff becomes more of a reality. It's coming now, but it's just hard to imagine that stuff, but it's coming. So
well, just imagine an internet where you have more control. And that is something that there's a lot of desire and there's, a lot of interest in out in the market. So it's going to come. Yeah. No,
I like that. I like that for sure. It's just so hard to imagine because we've all grown up where we've been controlled really by what you mentioned, all the entities involved. And so it's kind of hard to put your head around that, how we can really how can we have a decentralized internet? But I love that. I mean, I do. I hope that's the way we end up. So that's the way it should be, right? That's really the way we were kind of designed to be. So, all right, Travis, got one for you. So tell us what you see. I'm sorry, John. How can credit unions operationally? So this is kind of your expertise. How can a credit union operationally prepare for working with members and their digital assets?
Yeah, I want to tie this answer into some great comments that Travis just made about Web3, because when I'm talking about operationally preparing, or strategically and operationally preparing, I am thinking about preparing for that world that Travis was just describing. So to me, the defining characteristic of Web3, which everybody should be aware, is that there's not a unanimous consensus of what Web3 is. If you go read about Web3, you'll find all kinds of differing opinions. But when I look at all these differing opinions, I see a couple unifying factors that drive it right back to financial institution operations. One defining characteristic of Web3 in my mind is that money will become part of the internet, not something you use on the internet. You won't use your debit card to use your electronic dollars on the internet. The internet will invent, evolve, create, use a native currency or multiple native currencies. So the electronic dollar and all the other fiat currencies of the world, they are not internet native currencies. They're currencies that are electronic and centralized and file-based and batch-based. And we've found kind of clunky ways to tie them into the internet that creates a lot of risk, a lot of exposure, a lot of inefficiency. So Web3 will create a world where money and the internet fuse. You know, just like video and the internet fused, music and the internet fused, travel and the internet fused, so on and so forth. Talking to your family and the internet fused. So money and the internet will fuse. If that's a defining characteristic of Web3 in my mind. Another aspect of Web3 will be that people will have more control over their data, as opposed to large organizations having lots of the sole control over their data. So that's going to create two operational opportunities and strategic opportunities for local institutions. I believe that I'm very bullish on a reality that we are headed toward full steam, where you're going to have like two split worlds people choose to live in. They'll either have to use hyper-centralized currency in the form of a direct-to-Fed digital wallet where their bank account is basically with some government agency in one way or another, or they'll have a relationship with private institutions like credit unions and local banks, and they'll want to protect their data, vault their data, store their digital money in these local institutions. And that's the value these local institutions are going to bring to them. If we think about money and the internet fusing and people having more control over their data, they're not going to run a server in their house. And some will, you know, radicals like Travis and I might, but most people will not want to run a server in their house to store their internet money and their internet data and their internet digital wealth. They're going to want to partner with a local institution who has redundancies, operations, risk mitigations, insurance, et cetera, to process this stuff. So if you want to prepare your operation for Web3 and for digital assets and a world where EFT, NACHA, ACH, and everything else is the checkbooks of tomorrow, and money is one with the internet, you got to start by educating your internal management team today. Unfortunately, the vast majority of credit union management teams are underinformed on all the terminology, logistics, technology, operational movement of this data, basic concepts of why digital assets have value, how the global networks of these technologies function. And so that's where we really focus our time and energy at the start, is having a conversation with an FI about just basic literacy inside their own operation. Giving them the definitions, the language, the tools, the framework to talk about this stuff in ways other than, you know, the very banal talking points that come from CNN and Fox News about how this stuff is a fad and it's too dangerous to touch. Beyond basic internal education, like a half-day seminar or whatever to get a management team educated, start building strategies for how you're going to control and store and use this data in your institution so that you can offer value to folks locally. I really believe we're headed toward a world where either this data will be stored locally or it will be stored in a hyper-centralized, probably authoritarian type, you know, digital regime. And I know consumers are going to demand, at least US consumers, will favor the decentralized democratic method for storing their data. But that requires institutions to be strategically looking at all their operational technologies right now. Are they primarily on a technology stack that's geared towards ACH, NACHA, EFT, and checks? And if so, they're in trouble. So you got to map out that strategy and get educated and literate internally. And we love doing that stuff, slogging through that swamp with our clients.
Yeah, thanks for that. That's great information there. Travis, so I know you have some regulatory and background too. You're on a board, blockchain board and so forth, but tell us kind of what you see on the regulatory front in digital assets, because we all know that it's kind of muddy right now with not much clarity, it seems like. And I know some credit unions have told me we're kind of waiting to see what shakes out. And so what do you see, and will we get clarity, do you think, in the near future?
Yeah, John just said slogging through things, and you just mentioned money. I mean, that is the crypto world in general, and blockchain and digital assets. So there's a big push within the industry to have more regulation, and that's because, look, we all know too much regulation is bad. It stifles innovation, but no regulation at all can't foster innovation either, because nobody wants to touch it. I mean, Jon mentioned that, right? It's, people view it as toxic, and they don't want to touch it. So there is a big push, surprisingly enough, from within the industry itself for more regulation. The White House recently produced an executive order. 40% of central banks are in proof of concept stages with digital currencies. So they're pushing for more regulation. Jon mentioned the billions of dollars of stablecoin money out there right now, and transactions that are occurring in stablecoins. And then let's look at macro conditions, such as China releasing or starting use of the digital yuan. And so if we take a step back and we look at this and say, okay, so we've got billions of dollars in stable coins that are being used by not only consumers but businesses to transfer value. And the reason they use a stable coin, people say, hey, crypto's too volatile to be a money, to be used as a medium of exchange. Well, that's what a stable coin does. And I know there's some stable coins that blew up recently, but there are also well-established stable coins that are transferring billions of dollars in value every day. And the reason a stable coin is used is a stable coin is a cryptocurrency, has all the benefits of a cryptocurrency, of being able to, immediate funds availability, immediate reconciliation, immutable, stored on a blockchain, but without the volatility, because it's pegged to the US dollar. And so these stable coins are becoming so popular, they're disrupting the industry. And because of that, there will be more regulation coming. And the US dollar, if it wants to maintain its reserve world currency status, in order to compete with the digital yuan, the digital cryptocurrency of China, we're going to have to have a US digital dollar, a US digital stable coin. And so there will be more regulation coming. As far as immediate, what's going on right now with credit unions, every state is different. So I deal a lot with different states and what they're doing, and try to get educated and educate credit unions on what's going on in their state. I always encourage credit unions to get a seat at the table to participate in that regulatory process. So I can't really touch on what's going on in particular states. At a national level, at a federal level, there is the Lummis-Gillibrand bill, which is currently being entertained. It's looking to, well, there's a few things it's looking to do. It's looking to define who will regulate digital assets. It's looking like the CFTC is who they're recommending. It's going to outlaw certain stable coins that, what we call algo stable coins, which basically are very, very volatile, but insecure. But basically, it's looking to regulate this industry in a way that will allow it to still evolve and progress, but also provide the regulatory clarity that credit unions are looking for. And there were some comments in there, hey, where do we start? How can we get involved? There's some questions that came in. Well, there are ways for you to use third parties to plug into, your current ecosystem and to offer crypto services without a lot of risk on your part. But it is going to, credit unions are going to need more regulatory clarity before they're going to be willing to jump in. And it sounds like, that's something that Jon can really help out with, to provide that direction. So I think, we'll see something like the Lummis-Gillibrand bill get passed. It will probably be a watered down version. It will, not be what it is today, but we're going to get more regulatory clarity. We're going to eventually have a US digital dollar, stablecoin dollar. We are going to eventually have the regulatory clarity that credit unions are going to need to really just fully embrace this space. But for now, there are some things that credit unions can do to kind of dip their toes in the water without jumping in, fully. But it will come, and we're actually going to probably get that in the next 6 to 9 months, as this executive order has kind of dictated that that's when the reports from these various agencies need to be back in the hands of the White House to make recommendations and such. So we'll have more regulatory clarity in the next 6 to 9 months, I think.
Good answer. That's what we're hoping, right? John, at a high level, kind of put your architecture hat on and tell us, explain kind of what the requirements are for a credit union leaders to think about as far as what they need to, if they're going to explore crypto strategy from an architectural standpoint, what they need to be looking for or at.
Yeah, so all these things that Travis just identified are completely on point, and we're going to see we're going to see things like the G20 summit globally, prioritizing global crypto regulations later this year, probably around September, October. We're going to see U.S. banks become very interested in stable coins, and that's the segue into the architecture that we need to be looking at, I think, in the credit union industry. And the reason that we're going to see this Loomis bill and others drive banks towards stable coins is that it's basic math. Banking institutions have to recapture this capital, because we're talking now about hundreds of billions of dollars of capital that have left the banking industry and have no need to come back unless the banks start processing that data. So that's the key. If you want to build a strategy and an architecture to be relevant in the face of money becoming part of the internet, you have to make a very important decision. Do you believe that you'll be able to remain relevant in the future by just bolting on attachments and letting somebody else process this data for you, like an outsourced mortgage or an outsourced credit card or an outsourced investment account? Or do you believe and understand that what's happening is money is becoming digital, it's becoming one with the internet, and if you want to be in the money business, you will have to be involved in processing this data inside your business. You won't be able to be in the money business without handling, storing, processing this data. That's my analysis and estimation at this point, and what our firm is, guiding products and strategy toward. So that's a big problem for most credit union executives that they need to be looking at, because the most of the data processing systems and organizational architectures we have in the credit union industry are really there are two things. They're predicated only on the electronic dollar, NACHA, ACH, EFT, debit and credit card rails. That's it. And they're not incredibly open and real time, most of them, and able to tie into these networks and process this data. And also, credit unions have gone down a path in the last 20 years where they've primarily leaned on business intelligence systems and like next day, next week, next month data archives to run their business. But we're talking about money becoming a real-time internet-connected data reality and phenomenon. So credit unions are going to have to look at strategically how they store and process real-time data and money becoming data, and how they're going to tie it into these digital networks for delivery and connection to their consumers. If they just rely on vendors and platforms and third-party providers, I'm afraid that's strategically basically going to be cutting themselves out of the equation for being in the money business in the future.
Yeah, great response. And it's in a way, if I'm a CEO or CFO at a credit union, it's kind of nerve-wracking, really, because it seems so overwhelming when we've grown up in this space for 30 years, and some of this seems a little bit foreign. But I always tell people, how do you eat an elephant one bite at a time? You've heard that saying, and so that's kind of the way I look at the crypto strategy, really, for credit unions, and that is let's take the first step. Let's do that. So with that, I thank both of you for being here. We're going to kind of run it out on our timeline here, but I do want you each to give us kind of your final words of wisdom to our credit union leaders across the country. Maybe just anything you want to say that you want to leave them with that would maybe a good first step or second step for them to be looking into if they're kind of just dipping their toe at this point. Travis, you want to start?
So I saw some questions come in. I think those are great. Unfortunately, we don't have time to answer those, but you can reach out to me or John. So my email is thoban@ftsius.com. So just first initial last name at ftsius.com. Feel free to reach out and I'll answer some of those questions for you. First steps, I think, go ahead and gather some information from your members. I think you might be surprised with the millions of dollars. John has mentioned this several times, the millions of dollars in deposits that are leaving your financial institution. Go search your transactions for Robinhood, Gemini, Coinbase, and see what's happening there. I think it can be enlightening to realize like, wow, this money is leaving, it's flowing out. Then I mentioned it before, you got to start to participate in the legislative process. I can help you out there. I can help you figure out who to contact in your state to get going there. You've obviously got CUNA and some of these other organizations doing lobbying and such as well. So just participate one way or another. I recommend designating a thought leader. Find somebody within your organization that's bright and smart and forward thinking and can start to educate themselves on this and kind of lead the direction for you all, and just be that thought leader. Maybe it's an innovation group within your credit union. You determine what's best for you. And then some of the questions that came in is, where do we start? Well, let's talk more about that, right? Figure out what would be a good place for you to jump in. Talk to me, talk to John Harris, and we'll help get you some direction there. So unfortunately, can't answer all those questions today, but I think we can definitely help you answer those questions in some follow-up conversations. So John, thanks again for having me on. I really appreciate the opportunity to talk more about it. As you know, John, the first time we sat down next to each other somehow, and this always happened, crypto bros, right? They figure out that they have some interest in crypto. It's like we can't help talking about it, right? And so just appreciate the opportunity to I guess get in front of some of your partner credit unions here and talk a little bit more about it, as I love to do.
Absolutely. John, I keep looking at the wrong name. So.
All right.
Yeah.
So how do you get started? Reach out to individuals like any one of us and get some, education and conversations and seminars and content into your organization that is different than what's the very base, frankly, programmed information that comes from mainstream media on these topics. My parting comment would be, I firmly believe that we are all overseeing very important institutions and a very noble industry during what will ultimately be understood as a great clash between flailing, dying, struggling, centralized institutions, and a new way of processing data and delivering value to the world in decentralization. You can call it Web3, you can call it cryptocurrency, you can call it distributed ledger processing, whatever. We're living through the era of watching 100-year-old centralized institutions falter and consumers and communities fundamentally lose trust in them. So what we have to do is understand that paradigm and start building products and services and storing and processing the data that those communities and consumers think is valuable locally, because that's what they're going to want us to do in the wake of failing centralized institutions. It requires a strategy, long-term strategy. It requires starting to transform your operation and getting your operation literate and educated about these new technologies and data and monies. And then it requires delivering that stuff to your consumers operationally and digitally. And we're passionate about walking through that transformation with all of our partners. So you can get a hold of me at jon@DaLand, just like on the screen there, QSO.com, DaLandQSO.com. So thanks again, John. Great session, great moderation, great questions, and important topic.
Thank you, John and Travis. Great discussion. I appreciate it. And I thank all of you for joining us today.